Understanding areas of liquidity, sell-side liquidity, buy-side liquidity. This is a game-changing experience for most traders. It's one of those things that create a light bulb effect in your understanding of the market, where price will potentially go to sweep, understanding areas of low resistance liquidity, using that as a target. For example, if we look at this chart right here, using the Fibonacci from the high to the low, you can see pretty much the extreme premium, how price came in there, mitigated it, rejected of that position, failed to close above it, showing us the telltale sign that on the intraday levels, price is going to go to the downside, and the low resistance liquidity resting right here is going to be in the target. Now, this doesn't mean that I'm bearish on Nasdaq. I'm very bullish on Nasdaq. I'm still looking for a potential buy to continue high. And as you can see, I've already outlined my key level, what I'm watching very closely. And I'm going to remove this from my chart so you can see the key level. You can basically see how price created a higher low. We broke structure right here. After that break of structure right here, this last down close candle, retested, expansion. You can see we have an inefficiency right there. And that inefficiency, if you put in a box, start to scale down on daily, you can see inefficiency in there, you go to 4 hour, and look what you can see on 4 hour time frame, inefficiency. So what I'm anticipating to see is price come down in here, run the sell side liquidity resting right here, run this low resistance liquidity, come into this position, and I'll be looking for a potential reaction. Once price is in here, if I see a shift of market structure to the upside, I'll be waiting for price to come for a retest. So this is basically what I'm going to be looking for. I'm just going to draw it on my chart so it's much easier to understand. So if I do see price come down in here, mitigate this position, break a significant 15-minute high. The moment that high gets broken, I'll be anticipating to see a retest. On that retest, I'll be looking to see a shift in market structure when price is coming down for a retest. If I see a shift in market structure in there on the 3 minutes time frame, I'll use the high as my entry, and then this low is going to be my stop loss. So this is how I get into trades that deliver 1:10, 1:15, using the smaller time frame and using double confirmations. So this is just how simple it is for anyone who's struggling with finding consistency in trading, or you really have a very busy schedule, you don't know how to manage trading and also manage a full-time job. This is a very simple strategy, and all you got to do is to understand the areas of liquidity. And in this case, the area of liquidity is the downside. And if we go to the 2-day time frame, let's go to 2 weeks time frame. So on the 2 weeks time frame, I'm going to wipe the chart. You can see very clearly there's an inefficiency resting right there, giving you the telltale sign there's liquidity resting right here. And this is a point of interest to wait for price to mitigate. And once we're in there, we stay focused to look for a reaction. I hope you found this insightful. And if you do have any questions, feel free to drop it in the comment section. And if you do need support in trading, feel free to reach out to me or one of our team, and we'll be there to help you. I appreciate you, and don't forget to do all the social media stuff, like, comment, and you can share this with someone who's struggling with finding the buyers, understanding liquidity, areas of liquidity, sell side liquidity, buy side liquidity, and low resistance liquidity. So I pretty much explained that in this video. So anyone who's struggling with understanding that, send the video to them so you can help them today. I appreciate you, and I'll see you next time.